What's good, family? What's the vibes? How you guys doing? Welcome to another review, right? So we're gonna walk through a couple of things, right? And it's also going to be a very short video. I have three videos, but I think I want to compress two of them into one now, right? And then tomorrow we would use the Outlook to cover what the last video should be. The last video is really an outlook and my top setups for the week, right? In the Discord, we have been on a streak, right? We've been on a very good streak week after week since January. We've been profitable, and that's good, right? And I'm going to show you a little bit of that, right? So again, another thing I'm going to walk through is the concept of order flow, right? We're going to walk through order flow using mitigation blocks, right? So this has been a concept that I've talked about a whole lot, right? And I'm just going to use, the past price action, the past week's price action to kind of just show you how things work. My goal for everyone that listens to me is that they are able to watch these videos and improve their trading in some way. I can't guarantee you profitability, but the things that I have thought and shown traders that are willing to listen, I've engineered them to actually become profitable in the markets, which is a good thing, right? But I know that you become profitable is something that depends on you actually being committed to, the goal, to the business, and that's what I talk about a lot. So let's get right into it. Yeah, so we had gold. I'm going to talk majorly on gold right now. That's what I'm going to use to do the video. So it's a price action video where I'm going to explain order flow, and I'm going to use gold in the past week to actually explain that. All right, all right, all right, all right, all right, all right, all right. So now the first thing we want to do is go into the higher time frame. Right. If you still trade any markets without looking at the higher time frame, then something is wrong. Now, if you remember going into last week we were trading, or the week before this particular week that just ended, we were buying gold, right? And it was awesome buys because, reports and, the things that were happening cost for that, right? But going into the new week, we saw how the shout about gold was everywhere. Everyone wanted to, see gold buys because in periods of wars, gold expands, it's a risk asset, blah, 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 blah. When, the war is happening or uncertainty is happening, right? The markets can just start to rally higher, especially for precious metals. Now, this is true, but one of the things that you don't do, especially when you are understanding technical analysis or even fundamental analysis, is you don't take one event to just keep doing the same thing every time, right? You need to check what exactly is really happening aside that. Oh, yeah, the war is happening, but what is sentiment saying? If everybody's going to be screaming buys, what do you think would happen on the other end of the table? There are institutional traders that have packed money down that would offer the other side of liquidity to those buys. And because of this reason, I came on the Discord to say, yes, yes, gold has rallied, and this was Sunday opening. If we go to Sunday opening and see big rally Sunday opening, right? So this is Friday and going into Sunday, you see price just jolt higher and expand. Now, this expansion in itself is what I call the manipulation, right? This is where we're going to have the highest influence of buying decisions. Why? The news already screamed buys over the weekend. I'm sure you heard it. Your gurus came out to say, you know what, buy gold as it just, jumps up, or gold is going to, expand higher and just keep going higher. And it does that, playing into the narrative and allowing new buyers to load up positions with the hopes that price keeps going higher. Right, as we saw this expansion higher, especially I took out profits in here and left a very tiny position that I had going into that particular week just stated. Right. And I wanted to see sales. And that's why it was a very great week for the community. If we go back to look at the Discord, we would see a little bit of that. So the Discord channel is where I am more expressive, where I give out the trades that I'm taking in, and there are other traders, especially ones that I've worked with for a couple years, also inside of here doing the business, sharing their wins, sharing their experiences. We had a very, very good call on Wednesday, and if you just go through, you just see some of the things, very, very beautiful things that have happened, right? So last week we were selling gold, right? We were selling gold. We had this particular trade on the live session, right? It was a great trade. We sold this live. And again, if you have not joined the Discord channel, I'm going to drop a link in the description of this video, and it's also going to be on the Telegram. So you want to be here, right? It's not just a channel where I give out trade ideas. It's also a channel where I'm actually putting out information that can help you grow. A trader is not one that just understands technical analysis, right? You need to understand yourself, and that comes with personal development. That comes with, the things you need to know to be able to invest your money properly and all of that. And this is what this channel is, right? It's a free channel, so you don't need to pay $1 to be here. All right, so this was what was happening last week. We were selling gold, like I was saying, right? And I wanted to just bring you in here to just see the goodness that happens inside of here too, right? But let's go back to the chart, right? Because of this reason, right, the sentiment was screaming buys, right? And for this reason, I like to hold the other end of the bargain, right? Because the minority always wins, right? But not just blindly, because the sentiment was screaming buys. That's just not the reason why I want to just start selling. That's not the reason why I want to start selling. I want to also think about other confluences. So the way I make ideas or the way I take trades is by thinking about stacking confluences. Oh, okay, I have the sentiments on my side. The majority is screaming buys. That would mean sales for me, right? But that's not it, right? I still need to have technicals confirm to me that price is about to go in this particular direction. I still need the fundamentals to agree with me that price is about to go in this particular direction. And for fundamental sake, right, I did some of this on the Discord, which I would not go deep into. The dollar, right, had good numbers except on Friday. And we'll get back to that. The dollar had good numbers that held strength with the dollar. So if the dollar is going to see buy side, right, which means we're not cutting rates or the Feds are not cutting rates, gold doesn't like that story. That's sell side for gold. Right now, when we come down to technicals, which is where I really want to bring you to, is going into Monday, which see price jolts higher, but right inside of Monday, we see a breaking market structure. We see price fail to take out an old high and then a breaking market structure. Now, every single time I want to take a trade in any direction, the first thing I confirm is breaking market structure. If you can start to think about price like this, things will become easy for you. The breaking market structure confirms to you that, okay, price could be in a premium, but who tells you it cannot keep going higher? It could. You don't control price in any metric, but there's something that tells you, that gives you a view of what price could be doing next, which is what breaking market structure is. And it is simply consecutive candles moving in a particular direction, price closing below an old lows or old lows, right? The real meaning of breaking market structure is that bullish protocols are being disrespected. So we would see in a bullish market structure, down close candles will hold price higher. As price returns to down close candle, price would continue to rage higher. It is those down close candles that we can find our order blocks inside. Is what we call order blocks, bullish order blocks. But if you look at in here, we see these down close candles fail. That's what the bearish market structure. And it's not just failing on just, price just moving measly around it. You can see the break. You can see that, expansion through those lows. And with a close is what I want to see. So price closes below this low. And again, there is no time in price that you're a good market or you're a good trader, as it said, right? When you are selling when price is expanding lower. It would never be a thing when you are buying when the market is running higher. Even though you're going to be following the trend, which is what we still do, right? You still need to wait for price to return back into premium levels to be selling, to return back into discount levels to be buying. That's what a good marketer would do. So yes, we see the breaking market structure, but that doesn't mean we need to sell. This is what then brings me to what I want to talk about today, mitigation block. Mitigation blocks, right, happens many times when price wants to reverse. In fact, in my view, happens every single time. It's what you might call breakers, right? And I call them mitigation blocks because you are joining in on a play that is already happening. And that's what makes this repeatable. The fact that you are not being the first one out of the door thinking, oh, the dollar or gold is going to start to sell from here. You have waited for confirmation bias, breaking market structure, and then you're looking for this order flow play, which is the mitigation block. Now, the mitigation block is the down close candle in this case before a run higher that doesn't take out an old high. Right. And I will give you a very, very simple analogy to this. When price is going to move in any direction, right? And we're looking at sell side here, it's going to do just two things. The first one is it's going to take out buy side liquidity and run lower. And the second one is it's going to form a high, right? And fail to take out buy side liquidity, and it's going to go lower. Now, if you already look at this, you kind of start to marry this with something you already know, which is divergence, where if GU and EU are at a point of interest or at a reference point, and GU is taking out buy side liquidity, EU is failing to take out buy side liquidity, you know, oh, there's a divergence playing out. Right. But now many people don't know what to do when price does this. There's something to do, which is how do I then engage? Right? If price returns from here and goes back here, you're going to say breaker because a breaker is the last down close candle before a run on buy side liquidity. And after that, we see a break through those lows, and a return into those lows would mean for what? Continuous sell side, as long as price action is still bullish, or sorry, still bearish. And what a mitigation block is this second one, where price fails to take out the hold high, but it breaks market structure still. That is why breaking market structure is your greatest asset when it comes to changing directional bias or choosing the directional bias. It tells you that, oh, money is already in play for that direction, so we could see continuation in that direction. Remember that all we do as traders is make educated guess. But we can prime that up to a level that brings magnificent consistency. Right, so price returns from up here and to this, and that's your mitigation block. So you'd see that the idea of mitigation blocks and breakers are the same. They are not different. The only difference is for breakers, price takes out an old high and then breaks below an old low. And then in that case, you wait for price to return and you're selling that. For mitigation block, price doesn't have to take out the old highs. So if you look at what happened here, price ran higher, took out an old high, and as it goes lower, comes very close to taking out this old high. What I call this is a failure swing. And this is, when I say I'm just letting you know that I'm an ICT boy, right? Because these are ICT terms, actually. And always I would give credit to ICT, open my eyes to how to read price properly, I would say properly, the right way, the reason why you should actually be doing what you're doing. So you see what price does here, takes out an old high, that's good, runs higher, then rallies here, but fails to take out this old high. It's called a failure swing because every time we see an old high in price, it means there is buy side liquidity resting here. Simply, money is resting here that the market should take. Now, the reason why the market would not take out buy side liquidity is because it has sell side to aim for. That's the only reason why when you are selling, you don't want price to get to your stop loss because your stop loss is going to be somewhere above where you are selling, an old high many times. So you don't want the price to get there because you have money on what? Sell side, the same idea. Price rallies here and then fails to take out this old high, failure swing, and then breaks. So you see the idea of the second way price is going to reverse. It goes higher, runs lower, then comes here. You would say this high is called the failure swing. It runs higher but fails to take out this high. A simple way to understand a failure swing is the low that, or to understand a mitigation block is the low that leads a failure swing is your mitigation block. So this low that leads your failure swing is your what? Mitigation block. Many times it's going to be a down close candle because price is rallying higher, right? And it doesn't need to be a down close candle. You're just looking for the low before the run that fails to take out an old high. And then what follows is a breaking market structure. Very systemized. A high forms, a failure swing forms, breaking market structure happens. And then you're looking for price to return back to the low that carries the high that fails to take out the old high. Right? And then price gets to that level and go lower. If you need to reverse this and watch it again, please, I would oblige you to do that because this is really the source. If you check through the trades I've taken over the last 4 or 5 weeks, it's been this alone. I've been sharing these trades also lives. So you can go back and look at it and say, oh, this was what we were seeing before it took the trade. And then look for it back in your charts as a backtesting technique and come back and forward test this. Do this over 20 trades and see exactly where you land with the data. So what happens on Tuesday? A fall off. Beautiful fall off that happens on Tuesday, right? And price expands lower. And I'm just going to go into lower time frames because I was just using the 1 hour because that's where price was. But I'll go into lower time frames so we can see more examples. The 5 minutes would really serve us, but let's actually come to the 15 minutes first. Now, if we look at this, price falls off from Monday. But if we think about time of day, which I don't want to really go into too much, right? But if we think about time of day, would we have been able to engage this particular level? Maybe not. This is Asia session, and we're probably not doing anything because the day already closed on Monday there, and Asia session is probably nighttime our time in Nigeria here. But what happens as we go into the new day? Price breaks market structure from that entry. This is the mitigation block, the low before the run higher that doesn't take out an old high. Breaking market structure, price returns back there. You need to wait for this. Then you'll be smart money because you'll be selling when the market looks bullish, and that's when you're profitable. What happens again? Breaking market structure comes in, all right? And then price does what? Returns back. Now, if you think about what happened here, it's the same thing. A mitigation block is also here. There is a low, right, that leads a high that fails to take out the previous high. Let me mark out that previous high for you. This is a high here. Remember that this is already an entry point where we want to see sales from. And now those sales led another breaking market structure, giving you the trader the idea that price is what? Now bearish. It's still bearish. There's a breaking market structure here, returns, another breaking market structure here. Then price returns right into what? Mitigation block. The low before the run higher that fails to take out an old high. Breaking market structure, you can align such this with, a fair value gap, stacking confluences. Right. And what time was this happening? This was happening 3 o'clock EST, 3 a.m. EST, which is London session, right? The heart of London session. I like 3 a.m. EST. Regularly, you would hear the London session start at 2 a.m. to 5 a.m. But I leave the 1 hour, I leave the first hour is many times used as manipulation. As you can see inside of here, the manipulation here, and we can see the true move falling. Now, guys, look at this. What happens here? Breaking market structure. Again, every single time there's a breaking market structure, there's an opportunity for a trade in that direction. A breaking market structure, you align it with what we just looked at. The last low, right, before the run higher that fails to take out an old high, another mitigation block. Price does what? Falls off. Again, happens. Breaking market structure. This was why Tuesday was a very, very, very clean day. Very, very clean day. Price returns back to the mitigation block again. Low, runs higher, breaking market structure. The main source here is the breaking market structure happening. I remember we already talked about why price could be bearish. Let me show you another reason why I was really, 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 really particular about sell side. This was the same thing that happened in GU the prior week and even this week that I showed you, where we have consolidation on a large scale of things. Wednesday, Thursday, Friday of the prior week was consolidating. On Friday, we expanded higher. Monday, we expanded. After a consolidation, what happens? An expansion. That first expansion, we know it as what? Manipulation. That's power of three. Consolidation, manipulation, and what will happen? Distribution. So until price comes back to take out this low, I already have a draw. Now, this is one of the reasons why you need concepts under your belt. This is one of the reasons why you need thought leadership, right? While you trade, you don't want to just go in and just, think about, just one information and say, oh, this is the reason why I want to trade. And this is why people that just go and just watch YouTube videos many times don't get it done, or it takes them longer to get it done. And that's why I will always advise mentorship. You don't need to take mentorship from me. I only offer the one-on-one mentorship right now. Right. But you need mentorship to be able to know certain things that actually puts you very close to an edge that works properly. If not, you dance in circles and there's no reason why you can't, still get it done without paying for mentorship. It's just probable that it will take a longer time. But let's get back to this. So there's consolidation, price rallies, manipulation, breaks market structure. So we know we are dealing with what the distribution phase. And you see, all of those returns is just distribution. redistribution happening. Every run higher was being sold into, and we see that just happen multiple times. So there were multiple times where entries could have come in for sell side in here, right? And it happens that Tuesday was bearish. Let's go on. Right. I want to use this to show you mitigation block, right? That's what I'm using this particular week, and it's also a form of review. We saw Tuesday bearish, and then we go into Wednesday. On Wednesday, we ran lower, takes out Asia's low, a concept that I've thought a whole lot of time, Asia's low to Asia's high, right? Price takes out Asia's low, breaking market structure, returns back into discount, order block. Down close candle in a bullish market structure, or down close candles will send price higher when price is bullish. Returns back down here, expands to take out Asia's high. That's somebody's trade. But in this particular case, we are thinking sell side. Why? Sentiments is saying buy side, buy side, buy side. This move in here will be viewed in as what? Oh, just a manipulation. We're going to continue the buy side. And what happens on Wednesday also? Right, price takes out old high. Wednesday, we're on a live session, very beautiful session, and we're selling this live. Price breaks market structure, but that's not what I want to show you. Price breaks market structure, returns back into that OB and sells off. I would show you on the 5 minutes to kind of get you an entry. When the breaking market structure happens on the 15 minutes, I can go into the lower time frame, and you can do that also, and start to look for entry patterns or entry protocols that you understand. So let's look at this, right? This is the breaking market structure after Asia's high, right? When price takes out Asia's high or Asia's low, a liquidity has been grabbed. And every time liquidity is grabbed, every time an old high and old low is grabbed, expect a retracement or reversal. So we took out this old low and ran to take out Asia's high, going into what? Going into the New York session. So this high happens 7 a.m. EST, New York session. Now price breaks lower, breaking market structure. Again, in this case, you see that price takes out the old high. What will you call this? Breaker. That's just the difference. That's just the difference between mitigation blocks and breaker. So price comes inside of here, and this is an entry. Now, if you look at what happens as we go in, because this was not where I was getting into the trade, right? Some individuals in the channel, one of my girls, Duni, she's been making millions day in, day out. If you go through the channel, you'd see, all of our trades just popping inside of there. And I've just been so excited because we've been at this for, a couple years, and the results are showing finally. And that's exactly what this is all about. If you decide to give up right now, they are probably giving up very close to where you're supposed to get it right. Don't ever think that coming into trading is going to be, that space where in 1 month, 2 months, you get it right. It's the largest financial markets in the world, and it would require some work from you and relentlessness from you to actually get things right here. So if you're going to give up quick, maybe you should stop today. Right, let's see on. Right, price breaks market structure, returns back into the range, breaker continues to sell off. Now, look at what happens again. All we're looking for is breaking market structure. You might say this is a breaking market structure. Well, depends on how you see it, right? But I like this because price consecutive candles running lower, closes below an old low, and then price returns back. Now, this is the important part, right? If you look at this low that I'm going to draw out now, right? That candle. If we look at it, it's the candle that leads a run higher but fails to take out an old high. What did we call this? We call this failure swing. We call this failure swing when price rallies higher, fails to take out an old high, and a break in market structure happens. That's when we call it the failure swing. So this is the trade, right? And this looked like the kind of trade that we took, even though it was in a much smaller time frame. But this is a trade here, right? And we're able to get, I think a 1 to 2 we're able to get here. We're able to get more because we're doing it on the lower time frame. But this is the concept of what? Mitigation block. Right. That was Wednesday. So if we go back to Tuesday, what I want to show you is how the concept played out every single day of this particular week. Every single day of this particular week. All right. So let's go on. Right. This is Wednesday. Price breaks market structure. Right. This is a very classic move that I've thought, for Asia's low and Asia's high. I've done a video on this. If you go back, you'd see, me explaining why does price not take out Asia's high. And maybe I'm going to do another one that just explain this much more clearly. But there's a video of this I've done. If you scroll through the Discord or scroll through to YouTube, you'll actually see, a video on this. Price breaks market structure here, rallies higher, rallies higher, rallies higher. Right. We're looking for something important, right? And the first thing that we lay our eyes on as we see this is when price took out Asia's low, we saw a breaking market structure. This is important. That means that the discount part of this range means something to us, right? And in this case, right, if you were buying here, you probably were not doing anything wrong. The only reason why the trade probably would have ended up wrong or ended up as a break-even trade would have been because you are against order flow. And there's nothing you can do about that. You're going to get it wrong sometimes. You're going to get directional bias wrong sometimes. And that's okay. The earlier you understand that getting directional bias doesn't mean that or getting the directional bias wrong doesn't mean that you're a bad trader, the better for you actually, because you're able to move on to the next trade. So we saw price take out Asia's low and then rallies higher. Not any form of break here, but look at this. Closes above this order, that's a breaking market structure. So again, same thing, we're waiting for discounts, and you'll probably be waiting for a trade like this. In this case, in hindsight, or maybe it would be viewed as a counter trend or a counter trade where the directional bias is bearish, but you just want to get some liquidity on the day. And even with this, you probably still get the 1 to 2 out of it. Do you see? Because it's actually a good trade. The good trader is not the one that knows exactly what the outcome is. It's the one that positions where there's high probability for money to be made, which is buying discounts, sell at premium. Right. So that's one trade in here happening at 505. Maybe the reason why you don't take that trade also because of time, but it's actually a good play there. But look at what happens, right? Going into the New York session, right? Price breaks market structure. Very, very strong close below old lows. And what I have seen with traders is when they see this, they start lamenting that, oh, it's left me. Oh, no, 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 no. I'm supposed to sell this. And when it sells off here, they start to sell. Wrong. When you see this, you should get excited about, oh, I think I might have a trade on the day because I can now see a break in market structure showing me directional bias. Bearishness, but I can't sell here. I need to wait for price to return back into a level. What level are we thinking about? Mitigation blocks. All right. Now, the question that you might ask me is, why didn't you sell this as the mitigation block? Because if you check through the charts, yes, I had one sales here based on mitigation block from here, but let's leave that for now because it's on a much more lower time frame that I got that. But you can see it here also, breaking market structure, that return inside of there, I was selling that. But I had more sales coming here. And the question would be, there was a breaking market structure. Why were you not selling this low? Why did you choose to sell this low? And the reason is, if you look at this low led a breaking market structure that should have led buy side. So this is important. We see a bounce when price gets to that OB and starts to go higher. So the low here is important. If we look at it in comparison or relative to this high here, price doesn't go back to take out buy side liquidity and it just starts to fail from there. There's something I want to teach you, right? When price is going to break market structure, one thing will happen first. Bullish market structure is high or low, high, higher low, higher high, higher low. What is supposed to form? Higher high. When a bearish market structure is going to form, what will first happen is price would fail to take out an old high. That structural higher higher low, that would first stop. You would first see a lower high form. But this does not justify that it's now bearish. The next thing is what justifies it. After a lower high forms, then a lower low forms. If you think about what I said, if you need to reverse right now what I just said, just do that. And I would say it again. When you're thinking about the market structure shift, right, what would happen first? If price is bullish now, you saw that, oh, maybe this is a bullish play, let me buy this, right? And you bought this and price fails here. This could be a very good chance for you to be a flexible trader where you can actually say, oh, I was probably wrong on directional bias here, but I know what price is doing. Because if when a bullish market structure is going to change, this is what happened. Higher high, higher lows, but boom, price forms what? A lower high. But it doesn't just form a lower high. The next thing that happens is it forms a lower low. What is a bearish market structure? High, low, lower high, lower low, lower high, lower low, lower high, lower low. So the moment you can catch the lower high and then it follows a lower low, especially with consecutive candles like this, breaking through old lows, you know there's a breaking market structure, price is bearish. Now, we use this particular level that's a valid order block, and then when valid order blocks are being disrespected, we know that they are called what? Breakers. That was my trade from here. Very interesting trade. As soon as price was getting inside of there, I was selling. And I was doing what? Aiming for old lows. And that's mitigation though. Now you'd say, oh, mate, if I sold here, is it bad because this is a low that run higher that doesn't take out an old high? It's not bad. I'm just telling you why I chose this. Do you understand? Right? Price sells off, and that was Thursday. So these are the trade ideas for Thursday. And if you start to look at this clearly, you start to understand why you can't really depend on somebody's trade or somebody's idea for your trading. So somebody tells you, oh, I'm buying today gold. And you're like, what I saw on price is sales. But because you think that person is a better trader than you then go on to buy. And what they will do on that day is they buy here. They're able to scale out a 1 to 2. They've made profit for the day. You were buying late and you're not able to scale out anything, but you lost money. And then your particular idea for the day, which was sell side, you weren't able to engage that. So there are opportunities in price, and looking for the one that aligns with what you know is what actually gets you consistently profitable. So what do we see here? Price expands lower, right? And that's a trade there using mitigation block. We see mitigation block Tuesday, Wednesday, Thursday. We are not trading Mondays, obvious reasons, and then Friday. Now, Friday was very interesting because we had been selling all week based on, you know, the data that we have from the dollar looking strong, and that's putting pressure on an asset class like gold. But on Friday, which was NFP, first Friday of every month, right, the jobs market was coming. I'll talk a little bit about this. When we have the jobs market coming, and I'm just going to show you the jobs market. I'm going to show you the calendar very quickly. Right. Let's actually go to the calendar very quickly. Guys, give me 1 minute. All right, we should be at the calendar now. Okay, 1 minute, guys. All right. We are the calendar. And if you look at Friday, we have non-farm payroll employment change, right? And we have unemployment rates. These two news releases are very, very important for the dollar. The non-farm payroll, right, which is what we know as NFP or employment change, tells you the amount of jobs gained or lost on a particular month for the US economy. So for this particular month, it comes in every first Friday of the month. We had minus 92K jobs lost, right? We had lower than expected job claims, or lower than expected numbers coming. Now, the previous NFP, if you remember, we had 130K jobs added. And in that time, I talked about how we wanted to see what dollar buys. And it was those dollar buys that we've been riding to sell GU to have many of our shorts on gold, because the jobs market comes in strong. When the jobs market comes in strong, it tells you bullish dollar. But look at what happened, right? The forecast was 58K. We didn't even come in positive for jobs, for the jobs market. We didn't have more jobs coming. In fact, we lost jobs on this particular day. Minus 92,000 jobs were lost. That was the report that came out. So what do you think this report affects on the marketplace? Just as you can see it here, red, bearish. Unemployment rate is telling you, oh, these are the amount of, or this is the rate of unemployment in the country at the moment. The forecast was 4.3. What we had coming was 4.4. So if unemployment rate is higher than expected, what does that mean for the economy? Boom, bearish. So these two news releases gives you a perspective on what to do. That's why I tell you every single time, you don't need to trade the news release as soon as it drops. What you can do is wait for this to happen, and immediately this happens, you see me send a voice note to the Discord channel telling you exactly what the jobs market has just done, right? Which is what I just talked about now, and how we can see the dollar start to sell off, and we can see asset classes like gold go higher. When the dollar is suffering in terms of economic claims like NFP, like CPI, and all of that, what happens to gold is gold lost those conditions. So we will see expansions on asset class, on precious metals, on risk assets when the dollar is having a bad claim. The bad claim will be jobs actually, we're losing jobs in the economy. The unemployment rate is rising higher, CPI is getting cut or is cooling off. All of those things would tally to the story that the Feds are willing to cut rates come June. And that is a story that gold likes and thrives on. So we would see immediately after we had the news release. Let's look for the news release. It was 8:30. 8:30, right at 8:30, what happens to the dollar? I think this is 8:30 candle. It's a very sharp candle. This is what many people chase. And it's a lost cause if this is what you want to just chase, if this is all you want to get. It looks like a good move, but if you were able to come later, you have all of this. Which is better? This. And you'll be trading this off of a very, very precise number. You'll be trading this with high probability. And that's what we did on Friday. So what happens? Boom. Remember the news dropped, the market reacted straight away, sell side. And then we have this flush through that comes in again. Every single time we have price run into a direction like this, what will happen? There will be a bunch of individuals, a bunch of traders trying to trade this, trying to chase the move lower. And what happens? The market takes everyone out, takes out buy side liquidity. And this was when we were coming into the market. Price was here when I sent that message. 9:20. The moment a big news release plays out like NFP or CPI, I like to wait typically an hour, 30 minutes after before I start to seek what I want to do. I allow the dust to settle. Everyone trying to chase those sales here, right? I've now even not just, they've not just been taken out, they've now been invited onto buys. Oh, okay, it was just a run lower, manipulation to distribution. Then they start buying again, building up more liquidity here, and the market just crushes them. Right here, when price was here, gold was at a discount. So I said, gold is at a discount. Let me show you that quickly. We're just going to jump to present here. Right, so like I said, Discord channel is where you want to be. All right. So this way people that joined me in the trade after I sent the voice note. All right, so this was the voice note. Gold at discount, I'm taking a small buy and stop at old lows, right? It was a Friday. I don't trade NFP based on based on old scars that I've had, but right now there's information that can actually help you be much more confident taking a trade. The moment your trade gets away from a system, then you start panicking on taking trades. But the moment you have a system to why you need to be doing a particular thing, when that system plays out, you just trust it because you know exactly what you want to do. So DXY up here, gold where? Gold was down here, and it was a very beautiful trade. We had a breaking market structure. Price moved down into discount, and then I was buying down here at this OB after price rallied, came back inside of here. Price was at old, or stop loss was at old lows, and I was expecting, Asia's high. I kind of like closed with the day. I closed somewhere around here, and it was a very good trade. It was a very good trade, as you can see. Now, I'm very tempted to talk about what is going to happen next, but this video is way, 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 way much elongated than I wanted it to be. I wanted it to be around 24 to 25 minutes, right? But if you've enjoyed this, if you've learned something, if you've gotten inside, put that in the comments. Let me know if you want me to expand more on fundamentals. Right, I'm still a fresh baby when it comes to fundamentals, but it's so interesting and so important to my trading. I think it's been one of the things that's put me on the streak since the year I started, and it's just beautiful to see how it plays out right immediately. I used to think that fundamentals, would or affect price on a later time, which it can. Right, but if you understand, especially your economic release properly, you are able to, react and actually join price. One of the things you should be able to do is you don't want to be a trader that is you don't want to be a trader that just has information and thinks, oh, that information is going to just keep going and keep going and keep going. I say it every single time. The moment your cup is full, that's when you actually need to be much more careful and have your eyes on the ground. So anything can change at any time that actually can change whatever directional bias that you want to see. I'm sure so many people were trying to short or continue to short gold on Friday, right? But the data came in for weak dollar, strong gold. That's what happens. The moment the data is very weak for the dollar, we would see, gold expand higher. Now, as much as this was anticipated, this certain things that I just showed you in here are the reasons. And we would not just jump in and just go and do what and just go and buy gold. We wait for certain things like here, breaking market structure, and then you'd see our concept playing out. I know I need to show you that, right? Because I just showed you where my trade was, but look at this mitigation block, right? Price runs lower, fails to take out an old low, breaking market structure. Returns back to it at a later time, right? Stops can be here, depending on what you want to see, right? And you still have a clean 1 to 2. So guys, I hope I've been able to show you, it makes to understand order flow, right, using mitigation blocks, right? It happens a whole lot and you can just capitalize on it. I got a re-entry on this trade, which was the same idea, right? High here, right? Price runs lower, fails to take out an old high, and there's a breaking market structure, returns back into it, and a continuation for buys. So as you can see, very efficient. But what do you need to do now, right? You need to go back into the asset class you trade and start to seek, just like I've gone through Friday, Thursday, Wednesday for you using one information, and start to look for, this certain thing and see how it aligns with what you do and how you trade, or how you pick your setups as a trader, and see how you can improve your trading with this. This is my goal for this channel, that everyone that watches it is able to take something in here and able to implement it in their trading. Again, if you're not joining the Discord channel, it's going to be in the description link. If you loved this, give me a follow. Tell me exactly what you're going to want to see from me on the next video, and then I'll probably get to that so that we can all grow as traders. All right, guys, I would see you in the next one. Bless up, family.